Hey everybody, it is Wednesday, the 29th of July, and the market finished higher here today. We have the S&P 500 with a gain of close to $4 as it remains above that rising 20-day moving average. On the intermediate term, it did get beyond this little level that we've been looking at, the 323.5, and now we've got a nice cushion above it. So if we're to see a pullback down towards that level, we would be looking at making purchases of the S&P 500 on the upswing with a stop either under here or underneath that 5-day moving average. So bottom line is buyers are back in control of the intermediate term trend in the S&P 500. For the NASDAQ, we came right up against this level that we had drawn in a couple days ago, and the 5-day moving average is declining, but tomorrow as we get rid of this data in that 5-day moving average calculation, it's going to, if we open flat, you got to remember we're getting rid of this data, so that 5-day moving average is going to start to creep higher here tomorrow. So what we'll be looking at is today's low, well, actually this low right here. That's our key that we want to see it hold above. The daily time frame, we're still a little bit uncertain here, and if we break down from here, then perhaps a deeper pullback. And I think the key level again would be yesterday's low. If it gets back below that level, then I think that maybe a little bit deeper pullback. But again, the primary trend is higher, and we are in the middle of earnings season. That's going to have a lot to do with what goes, happens here in the Nasdaq, in particular with the big caps reporting in the next 2 days. Russell 2000 is still holding that 200-day moving average and had a nice bounce higher from it today, up close to $3. The intermediate term time frame, we of course survived a test of that prior resistance. It didn't get down and test that volume weighted average price from the earlier low, the mid-month that is. So now we're looking at this market again. Buyers are back in control. Ideally, we'd like to see this level hold as the new support area. It had been prior importance in that it was resistance over here, turned into support, then resistance again. Trapped the shorts yesterday, and today they got squeezed. So I think about 147 is the key in the Russell 2000. If it maintains above that, I think you can be looking for a new recovery high in the Russell 2000. Semiconductors, I'm not sure they closed at a new all-time closing high. This high was actually 165.89, so pretty close to a new all-time closing high. But the fact remains, above that rising 20-day moving average, we have higher highs and higher lows. And on the intermediate term, it's been a little bit choppy in here, but buyers remain in control. The biotechs have been the weaker group here recently, and today they lost a little bit further ground below that declining 5-day moving average. So 135.5 is going to continue to be the important level. I'm not looking to short this market. To me, it's too strong. It's got a rising 50-day moving average. I don't think you want to short markets with a rising 50-day moving average. And just again, the short side is just so much more difficult overall in this bull market that I think it's just better to leave the biotechs alone, or just wait for evidence that the buyers are regaining control. The financials bounced nicely from the conjunction of these two volume weighted average price levels. We're back above the 5-day moving average, and now we can look at this prior resistance and say it has held as support. And what we'll be looking for now is about 23.90 is the key level. If we start to see the market back off from here a little bit, we'll then looking for a bounce, and then to be able to purchase. To me, it looks like what I meant to draw was this, to purchase something like that. I think that you're going to see these financials head back up towards that 200-day moving average.